So, hi everyone. Hope everybody is doing safe. Everyone who's joined the webinar. So today's topic that we are going to discuss is impact of COVID-19 on businesses and how it is going to impact technology adoption. And we have some really great content and discussions for everybody who's joined us. So in our panel today, we have Mr. Anirudh Damani. So Anirudh is the managing partner at Earth Venture Fund. Previously, Anirudh led the alternative investment arm for his family office, Earth India Ventures. He invested in high-yielding renewable energy projects and into early-stage startups with high growth potential. At Earth India Ventures, Anirudh invested in category-defining startups like Oyo Rooms, Purple, Tala, Now Floats, Kootloot, Mobilewala, Rapido, and a lot many others. Before this, Anirudh was an entrepreneur in the energy space in the US. He worked with some of the largest energy companies in the world, like Suez Energy, Direct Energy, Constellation, etc. Anirudh is an alumnus of Boston College and Cathedral and John Connon School in Mumbai. He is an avid scuba diver with 40 plus logged dives. All right. He also writes a popular blog on showmedamani.com. 40 plus, I think we'll have to take another webinar on what are the good hotspots for diving. Right.
Absolutely, it's an amazing world. In fact, this year's target was to do 50 dives till COVID-19 came along and put paid to those ambitions. But thankfully, I did get some dives in Andaman on a short trip before the whole crisis started.
Okay, got it. Yeah, I've heard Andaman is great. And so we also have Jinesh. So Jinesh Shah is co-founded Omnivore with Mark Kahn in 2010. Previously, he was Vice President and CFO at Nexus Venture Partners, one of India's leading venture capital funds. Earlier in his career, Jinesh worked in corporate finance roles for Datamatics, leading Treasury and M&A there, Patni Computers initiating the IPO process, and HCL Technologies, founding the BPO business there. Jinesh is a member of the World Economic Forum's Global Future Council for Food Systems Innovations and a member of the IMC Chamber of Commerce and Industries Agriculture and Food Processing Committee. Jinesh is a chartered accountant with a BCom from R.A. Poddar College and an MMS in finance from JBIMS. So thank you, Anirudh and Jinesh, for joining us for this for the webinar.
Thanks.
And quickly about, so I am Devang and I am the Chief Technology and Product Officer at KredX. KredX is a fintech company. More about us at KredX.com. So, we'll just start dive right down into a couple of fun things. So Jinesh, I just wanted to start with you on on what you've seen since COVID-19 situation came out, right? So you are you co-founded Omnivore and you have a lot of companies, and Omnivore's focus is a lot on agriculture, agri supply chain, and food products, right? And these are still essential. These are essential commodities, and whatever happens to the world, these are things that will definitely be needed. So, just wanted to hear your thoughts on how did you see as the situation about COVID-19 developed? How did you see the companies who are involved in the agri supply chain adapt to to the rapidly changing situation?
Sure. Which we've been trying to understand for the last 3-4 weeks, right? COVID-19 for most of the industries has been a shock, which probably most of us have not seen something like this in their lifetime, right? So for us at Omnivore, this was something which was unexpected, but I think what really helped us out is that our focus remains agriculture sector, and most of my companies have been part of the ecosystem, which and none of the companies really had a situation where we were completely shut, right? I mean, the first 2 3 days when COVID lockdown started out, I think most of us were shell shocked to trying to understand what was happening around it. Uh, but in the next 2 3 days, once we realize that the agriculture sector and the essential commodities are a sector which are open, I think most of the portfolio started figuring out what is to be done. Broadly, what you're seeing is that the government has not stopped any one of our portfolio companies to stop on the functioning of it, right? Except one or two companies with the factory locations were in areas which were under total lockdown because of the health scare there. But most of the other portfolios were allowed to do the business. So what really uh, the challenge which the companies faced was not from the government, but the bureaucratic levels or the bureaucracies in terms of getting the passes required for the workers to come in or for the employees to deliver the produce to the customers. That was one challenge we faced. The second one was the supply chain, right? I think uh, even if the goods were ready at the factory gates or the processing centers, it was difficult to find trucks and workers to load and unload stuff. That was the second challenge. But over the next 3 4 days, I mean, the first 8 10 days of lockdown, we could figure out what is to be done, and things were getting streamlined in a much better manner. What in some of the cases, the COVID-19 probably is going to bring a significant change in how the business for agriculture is going to work. I mean, we are seeing a trend where farmers are now directly reaching out to consumers. I mean, we all have been saying that middlemen has been taking the maximum chunk of profits from the agri value chain. But for the last few, but in the COVID-19, what we have seen is that farmers are now reaching out, or their fears are now reaching out to consumers and using technology to help them out, which is really helping the business to probably maximize profits for the producers and also for the people who are adding value. Uh, on and whole, COVID-19 probably from an agriculture sector perspective is a short-term shock, but on a medium-term horizon, we think it is going to give flip to use of technology and optimization of supply chain, and this would really help the sector on a midterm basis. That is what broadly we are feeling around it.
Got it. Great. Thanks for that. And we will come back to some of the points that you mentioned around how technology will change and how supply chains will get impacted with technology, and how farmers will um, as you mentioned, it's farmers are reaching directly to the consumers, and internet and technology in general has been a great platform for for getting two ends of a marketplace meet. So we'll come to that point in a bit, but before that, I just wanted to get Anirudh's thought on how he has seen companies in his portfolio. And so Anirudh, you've been involved in a lot of fintech companies, but also a lot of companies that work with small businesses. So how have you seen these companies adapt to the changing situation in the past couple of months?
So, the best part about entrepreneurship is that we're all eternal optimists at the end of the day, right? We always find a way to come back. We always find a way to make things happen. And I think that's what's happened with our portfolio. I think for the first couple of weeks, we were, just like everybody else, you'll have to go back 2 or 3 generations before you can find a similar event that happened on a global scale. And therefore, there isn't really there isn't really much memory to go upon and say, that this is what's going to happen or that's what's going to happen. It was really an evolving situation. To tell you the truth, actually, our team and we were all on an offsite in Goa the weekend before the one weekend before the shutdown happened, right? And it was only when we got to Goa and saw the number of travelers that had canceled their bookings and most places were empty that we started realizing, okay, there is something serious that's about to happen. But thankfully, I think once we came back, we took the bull by the horns. We immediately started making changes. do the annual budgets. We work with our entrepreneurs. Within a week, most of them were prepared with 3 scenarios. One of which was, imagine if you had no revenues from March 15th onwards all the way till June 30th, and July 2020 the revenues would be 25% of what you had in Feb 2020. So if that is a scenario, how long will the cash in your bank account last you? And obviously by the time we got done with this exercise, the market was moving 5 or 10% up or down every day. Like, you don't see that kind of movement in the stock. You're seeing that in the index. So very unprecedented situations. I think for at least a couple of weeks, we just played it by the ear. We had a plan in the morning, we were adapting it to by the afternoon, and then we were again replanning for the next day. But I think within 2 weeks, one thing started to stabilize. A lot of our portfolio companies actually adapted new business models. Most of them got used to the work from home situation. Many of them actually streamlined operations, found ways to increase productivity. Many of them opened up new business lines. So we have Everest, who is now operating a taxi for essential services within Mumbai. So they're actually operating 150 taxis along with the Mumbai police. We've got Dalchini, who's currently operating 50 vending machines in essential services, IT operations, right, across Noida and Gurgaon. And in fact, to Jinesh's point, I have a personal company that I invested in called Farmers FZ, which has seen its best revenues ever because they directly take produce from the farmers and deliver it directly to consumers. Even on the fintech side, we've seen companies that have found ways to still lend but do it innovatively, reducing the ticket size, figuring out which people are still going to be at work, working from home, so they might be able to still take loans. And I think overall, after a month of being through this entire exercise, I think things look much better. We're a lot more comfortable with where we are right now. Obviously, we're not out of the woods yet. There is still a lot to be done. Let's see how the government restarts the economy, what kind of incentives are going to come our way, what kind of liquidity is going to come our way. But I do believe that the crisis has forced us in a way to adopt technology. It was long enough that you could see a permanent shift in habits, and that once we come out of this, you might see a population that is much more acceptable and much more equipped to accept the digital ways than it was maybe earlier. And therefore, I think any business that has any kind of a digital aspect is definitely going to see some incremental revenue, some incremental growth as we come out of this crisis.
Thanks for that, Anirudh. And so, Jinesh, coming back to the point that you were mentioning earlier about how consumers are connecting directly to the producers, right? So, what kind of so are you seeing that more in terms of the producers adopting technology in terms of whether it's like some e-commerce platform or some digital tools, or is it more in terms of consumers getting more aware about how to get in touch with producers, or is it something else? So basically, I'm trying to understand how these two marketplaces are combining.
So I mean, I'll tell you where the two things. I'm looking the technology aspects from the producers first. We'll talk about the consumer second part. From the producers' perspective, I think they were using technology, but they were generally using for like WhatsApp or something for the entertainment. They were not using for the business purposes. For the first time, they felt that the mandis were not working. They did not know how to sell, and the crop was on the field, right? So they were forced to work with companies which were having a consumer-facing role, like could be a Udan or could be a Dehat or AgroStar kind of companies, and they started downloading those apps from those companies, giving the information of what is being produced, when is it ready for harvest. They were trying to figure out where warehouses, using technology to figure out where warehousing is available, where it can be stored. So producers started using technology for the first time, and which was without any push or any kind of incentives given to the producers. It was a survival need, and they started working on the same. And I think this is going to help them in a long term, because what they realized for the first time is that they can now directly talk to the consumers, or maybe a level just above the consumer, directly, and it saves them the money. It makes them more profits because they were dependent only on the middlemen or the APMC markets, which have been running on a card basis. So that is where producers have started using technology. They are now using WhatsApp or even Telegram or WeChat just to you get the information about what is being available when it is to be sold. In fact, in one of my portfolio companies, they were doing a Zoom call with the founder of my portfolio company every day to figure out when is the company going to buy the produce from the field, or when the company's employee is going to come to the field to pick up the produce so that he can start doing the business. So that's something which is a shift, and I don't think the producers are going to walk away from that. They're only going to adopt more. From the consumer's perspective, I think with this healthcare happening out, and I think with the discretionary spend of people going to come down, because we think with this crisis, we think India will bounce back, but we will see a lot of discretionary spending for the from the consumers getting reduced. They would focus on essentials, but they would also want to focus on improving their health quotient, right? They would want to eat healthy food. They would want to understand what is being produced, how is it produced, what are they consuming around it, and they would be looking for traceability, looking for complete transparency. So the consumers are going to start demanding this because they will now be willing to pay slightly a premium for getting this information, because they are now worried that about their own health, right? They would want to get a better food for their family and better consumption habits. And this in turn is going to enforce the producers start doing what the consumers need, because farmers in India have been reacting to the consumer demands, right? They generally will react to what the consumers ask. So if the consumer starts demanding a change in the eating habits of what they are, or in terms of transparency, we see farmers reacting to the same. And this trend is going to remain a long-term basis. We see more farmers using technology to get the data on the field, and that the same technology platform is going to use to connect to consumers on a direct basis. I think this is a trend which we think is not going to be reversed for some time now.
Thanks for that, Jinesh. So Anirudh, in terms of trends and continuing the thread from Jinesh, in the past couple of years, we have seen a lot of events happening in India that has forced small businesses to kind of start adopting technology. Right? We had demonetization, in which there was a big drive, and there is still a big drive to adopt digital payments. Then we have GST, which for which people had to get used to JSON. I remember people from my hometown. They were saying, "What is JSON?" They want engineering. What is JSON? We don't know what JSON. Right? So, but things have changed a little bit. People have adopted it a little bit to a certain extent. But again, like the peak that had happened in a lot of these adoptions have kind of come down. So wanted to understand from you, like in terms of when in the past experiences that you've seen with working with your companies, and the customers of those companies, how do you think as Jinesh was mentioning, there is this digital adoption happening across the different sectors. So what do you think will stick? What do you think, and why would you think some aspects will stick and why it won't?
No, I think Jinesh brought up a very, very important point, right? That the farmers, right, that they were not using these digital tools that they would come to even to us for funding, because I didn't really see that they were forced to use them. There wasn't really a need for them, right? There was always a good to have kind of a situation, not a need to have. But what this crisis has done is taken those good to haves and put them right bang center and made them need to have. And while like a large part of the population, like the farmer coming into the digital fold, is a huge fill up to the agri-tech sector, right? Or if you look at on the fintech side, we believe most banks in India were lagging far, far, far behind the fintech revolution, right? Or you had all these fintech companies, and even if I look at it as a fund for myself, dealing with the bank was the biggest pain point in itself, right? So while we were trying to bring in the best technologies and we're supporting all these amazing tech companies, if you tried working with a bank itself, it would be so difficult, right? I mean, they were still working on archaic systems. I can still remember that HDFC required me to have some sort of a digital key that had to be downloaded only to my laptop. And if I changed my laptop, I could not access my corporate bank accounts. And that was their way of calling it security. But now you're seeing that even HDFC today is willing to take a verified email to make transactions happen. This was unheard of in the past, right? Hi to Jinesh's daughter, by the way. uh, and and I think this is a direct impact of why this digital thing is going to do to the population. Even if I go back to the edtech sector, right? And this is what I was on a webinar about a week or so ago, and we were discussing that earlier. All these tools that entrepreneurs were creating for teachers to get better at teaching, the teachers never wanted to use them. For them it was they were almost scared to use those tools, and many times the teacher herself would look foolish trying to use these digital tools because they weren't actually born and brought up on this kind of technology, right? But however, if you look at what this crisis has done, it's forced them to utilize those tools. It's forced them to become more digital, friendly. And when they come out of it, and you're looking at some of this stuff happening in Wuhan now, and that when they come out of it, schools, colleges, even principals, even teachers are much more willing to use digital tools because they've been using it for 60 days to do their job. And I see those kind of things are going to stick, right? Yes, there's going to be temporary things like people getting used to digital newspapers versus physical newspapers. Whether that's going to stick in the real world after that, are you going to go back to do I see my father continuing to use a PDF newspaper versus cutting snippets out of physical newspapers? I think I don't see that sticking on very long, unless of course this is like a 6 to 9 month kind of a shutdown. I don't see that happening. But yes, I do believe there are a lot of sectors where things were good to have. These digital tools that were good to have to make you more productive, to make you more make you better at the job. Those are going to change and going to become need to have. And those are the sectors that are going to do very, very well. I mean, I think they sort of took what was going to happen 4 years or 5 years later, and suddenly it's bang right here. And if anybody was an investor in one of these things, it's going to be a great time to be in that cap table.
Great. And so Jinesh, you also mentioning about how a lot of things in the agri supply chain is changing, right? But so agriculture, the way it has been working, with all the middlemen and mandi, and that has been kind of ingrained in the mindset and the business model for decades, if not centuries. Right? So do you think so? While tool adoption is one aspect, but do you also think that the fundamental business models are also going to change for in agriculture, or is it the same business model that will kind of get a layer of technology?
Look, I think that this situation is going to. The event has made people change how they are doing the business of agriculture. I mean, farmers never used to speak to anyone beyond the aratyas to sell the produce. Today, those aratyas are not functioning, and who are functioning are the small startups or companies like Dehat, maybe Dehat. I mean, companies like Udan, companies like Ninja Card. They are reaching out to end consumers, right? People are asking how. Companies are now even supplying to Kirana stores directly just to get things moving because the markets were not working. The APMC markets were not functioning the way it should be done, right? And what has really happened is that this is the time where the small startups, the startups have been able to create a positive feedback with the farmers because they are helping the farmers at the time when the crisis was the highest. These startups are also well connected with technology, so if the farmers are now looking for some kind of credit appraisals, I mean, the Aratyas used to squeeze them out. They used to give them loans on interest at probably far obscene rates, right? Now with the startups, working with other startups, they've been able to manage somehow to give the farmers a credit, give farmers payment in 3-4 days time frame. I mean, and that is where the farmers have got a huge positive understanding of what the startups are functioning. They now realize that startups are not running away. So, and for the first time, farmers will really get paid much more than what they used to get from the traders. Today, if the farmers have produce on the field and they go to a trader knows the plight of the farmer. He's going to demand at a much lower price than what a company which is funded by funded startups, they would pay the farmers the right price, what they used to be given. They will help farmers. They will connect to farmers in lot more ways than the Aratyas were doing in the past. So I don't think this is going to change. And this business model is there going to remain because for the first time, farmers are directly talking to consumers, which never happened in the history of farming in the last few centuries. So this is a fundamental change, and I think this will continue. I mean, because farmers are making more money than they made in the past, I don't see a reason why they would go back to the old ways and start making less money and get exploited. I mean, that's my submission right now.
I think Jinesh is also a great time for fintech companies to reach out to farmers, right, and start offering more solutions.
I think that's the way, right? I mean, reaching look, the farmers need money. And there is no dearth of capital, Anirudh, right now with the farmers. The dearth of capital is at the right interest rate. So if the fintech companies are able to provide farmers at 14-15% kind of interest rates rather than 35 or 28-29% interest rates, then you are in the long game. I mean, you're in the long haul because farmers would love to work with you because one, you give them more ability to connect to consumers, you give more options because tech startups are much more smarter than an Aratya would
Very
be,
true.
right? So, and if you're able to give it the right price point, the farmer starts making more money than he had ever made in the past. So he would continue doing it. I think if someone has money today, I think they should go to farmers today and say, I'll be willing to give loans to you.
It makes a lot of sense. I completely agree.
Yeah.
So it's also said, this. So there was this, interview by from the head of IHMR, Dr. Raman Gangakhelar. He mentioned that the COVID will come in waves, right? So there'll be a peak and then it'll kind of go down, then it'll come back up and then go down. Right? So what are you suggesting your kind of the founders and the leaders that you're working with to to focus on? What is how are you asking them to think about and deal with this?
So, I mean, one thing you're told our founders is to stop worrying about the financial planning right now because I don't think anyone has enough data to do any financial planning. So, we have asked them to reduce the cash burns and everything that has been done. But what we have asked them to focus is on the operational supply chain because, rightly mentioned by you, that COVID will come in waves. And it is possible that India would not go for 100% lockdown, but the places where your businesses or your customers are might be in a lockdown because of the containment issues. So we are asking all our portfolio companies to figure out if they can decentralize their supply chain in terms of from the areas where they're getting the produce and in terms of the number of customers where they are located. If they can diversify everything and keep their trucks and everything scattered across locations rather than centralized locations, that would be the best hedge for them because we don't know which part of the country would get into lockdown because of the COVID scare. So, I mean, that's what we've been suggesting. At the same time, we've been asking our businesses to uh, empathize with the employees by saying that, guys, we don't need to fire people every time because there's a crisis. Figuring out a way saying that if the business was supposed to be done at 100, and if you're doing at 60, can we pay them 60% of salary? The business has 120%. Can we pay them 120%? And whatever the gap is, can we give them in terms of ESOPs so that whenever the company's business improves, they can be compensated in the future. So we're trying to work both ways because without a empowered and passionate team, no amount of supply chain preparedness would help. If we have a great supply chain preparedness, but the team is not motivated, I think it will falter in execution. So we've been trying to work on ways saying that how do we make the supply chain more decentralized at the same time work with employees because without employees nothing works.
And Anirudh, how about you? What are you asking? Anything else that
I think, yeah, I think on the cost end, I think most VCs are all aligned, right? We're all on the same page that we don't really know how this is going to end, when is this going to end. So the most important thing is that you survive, right? And so we've told most of our companies to cut any kind of unnecessary expenditures, right? One of our companies actually just did what Jinesh was talking about, which is they cut their salary bill by 60%, right? So they've become 40% of the original salary bill, and they've given ESOPs in return to the employees, saying that you guys are our partners now. You guys are now investors in our company. It's just that you've given us your salary instead of actual cash. And then now their runway is extended for almost another 15 months. So it's a 21-month runway all of a sudden. And I think those are the kind of innovative ideas that are going to come out. And on the revenue side, we're being cautiously optimistic. I think there will be demand. I believe there's going to be some destruction, but there's also going to be a lot of delayed demand. Right? There's still going to be some people who are getting paid and they've not made any discretionary spends in the last 2-3 months, right? And therefore they've not gone out. People have received refunds for their travel expenses. People that have booked vacations for the summer suddenly have that money in their bank account. They're not going to go out. You will see a lot of domestic travel going to happen. I see a lot of changes there that people may not want to travel to an Italy or a Spain or to China for the fear of the kind of spread that happened over there. But you might see a boost in domestic travel, right? So you got to be prepared for that. And I think that's what we're telling our companies, that just make sure that you're there when this thing turns around, because it will turn around, right? But you cannot be in a situation where things turn around, you have no capital left, you cannot make any expenditures, you cannot go out there and capture business, and when you are ready to fundraise, you don't even have enough timeline to let an incoming investor do due diligence, and then you're sort of doing rounds that are heavily discounted, and you're giving up too much equity, and you look desperate, right? So for most of the companies, you said, listen, 15 to 18 months of money required in the bank account. You start fundraising if you need to, probably in Jan of next year, and then you give it till June to September of next year to close the round. And whatever money you need for that, it doesn't matter what valuation you get. If you get a flat round, consider that to be 3x up valuation. But take the money and make sure you survive. If you die within this process, no one's going to come and save your business. I don't even think many companies will even see like an acqui-hire situation happening if they die in the next 18 months. So they have to stay alive. They have to stick it out. And I think once this thing turns around, when the sun finally comes out, if you're alive, you will definitely prosper.
So we'll take up a couple of questions that have streamed down from the audience. And so audience, anybody who's listening, please ask your questions in the Q&A so that we can kind of group them together and ask it and ask similar theme questions in one go. So there are some questions around. So there are some questions which are very sector specific, which we can get into a little later. But there is one question around the impact on rural India. So a lot of the news that is coming up, like whether it's Bombay, Delhi, all the hotspots, they're very focused on the on the urban India. But do you see, or do you have a sense about what is the impact happening in the rural area, and how are they addressing this?
I mean, I'll take a stab at that. I think if I look at rural India, I think the agriculture sector probably is going to make profits this year. They're going to grow significantly. And I think with the way the liquidity is going to come in the agri sector, in the rural markets, I think I would see a spurt in demand in the rural India. One, because there's less incidence of COVID there because of the natural social distancing in the rural India. And second, I think with the agri sector hopefully reviving and probably also looks to be good. I think in the rural India, I see the demands to be coming up back. I mean, I don't see a dip in the demand. So and also rural India is mainly about the essentials, right? I mean, in urban India, people do a lot of spending on lifestyles. When in the rural India is mainly about essentials and focusing on solving your basic needs. I mean, and that is going to continue. So I think the rural India should be okay, right? I mean, we will have some supply chain issues, but overall, I think the market should be fine.
Jinesh, do you think that there could be a situation where some of the rural people in rural India could start doing discretionary spends, probably go up a little bit, a couple of categories in terms of spending?
I mean, generally, it really happens in the harvest. If the harvest remains good, I think you would see people would do discretionary spend, like buying a motorbike or buying something which is useful for them. I don't see spending them like the urban India and saying, I'm going to spend money on travel and spend on living in a five-star hotel. I think that's going to not be there. But I might see a two-wheelers spurt in demand. I would see increase in the spend for the education, online education happening in the rural India, because a lot of people, kids who used to come and go to urban cities for studying, and now will try to figure out if they can use around that. So those kind of spending would really happen around it, but not the tertiary kind of spending that I want to go and spend, have an experience living in some of the exotic places. That's not going to happen.
Thank you.
So the other question is, more on sectors, winners and losers. So there are, some sectors which are winning a lot in, for example, in edtech and gaming. More in terms of where people have been working, can use it from while working from home. While there are some other sectors like hotels, hospitality, travels, which are stressed out, and there's not a lot of bookings happening there. So but like but there are a lot of sectors in the middle, like from food and deliveries to fashion. So do you think even manufacturing, where there are reports that some of the manufacturing companies have already started doing manufacturing again, or they started so any specific takes on sectors which are not that obvious?
I think this is a lot of people have answered these questions. I think most of these sectors like food, I think wherever there's a high amount of discretionary spending required, would take some time to revive. But I don't think it's going to be like a complete stark darkness in the Indian context, right? India would see some amount of, like what Anirudh mentioned, that we might see an increase of domestic travel rather than the international travel, because people would still want to take some vacations. People would want to do it. Maybe they want to do it at a lower cost. Maybe that's how India is going to react to it. Anything which is luxury might take a longer term, but anything which is good to have it, people would start using in next 3 to 6 months. It's not the country is economically shattered, right? It's probably induced just to ensure that our health quotient doesn't go below the normal points.
I think neo banking could be a very big sector that takes off in this situation, right? Because crowding at banks and now going to a bank to transact, I think that's going to be that adoption is going to go down, and because we're getting more used to digital, you might see people much more open to opening up a bank account without actually visiting a center. And I think even the banks, from their part, may also be open to working with neo banks and ensuring that they can easily service a customer without actually having them come inside the branch. And that could be another sector that I believe could do very well.
Thanks for those inputs. So so Anirudh, there are a lot of questions which are coming in from a lending, financing, fintech perspective, right? So things like, where do you think farmers can get a lower rate, or how are fintech going to adapt, or change their risk model or underwriting practices based on these situations? So I know you work with a couple of fintech companies and credit companies as well. So how are they thinking about this? Especially for small businesses, or maybe also, I don't know if they work with agriculture sector or not, but also on that aspect.
And I know, for example, one of our lending companies stopped lending to delivery riders and to people working inside malls about 15 days before the lockdown, right? Because they saw that this could be a stressed out sector. But I think when it comes to businesses, and when it comes to even your daily wage worker requiring some liquidity to get started, your kirana stores, things like that, I think the government will have to step in and sort of backstop some of these loans. I think there is risk capital, but the question really comes in is that, if this crisis, supposing we have a W-shaped recovery, so we open up, things sort of recover, and then it spreads again and we again have a fall, a lot of these companies may not be able to survive this kind of a double drop. In that situation, where does the government come in? Do we have some sort of a credit assurance guarantee fund or some sort of an insurance against these kind of crises? And until and unless we see that happening, I don't see the return of lending in a big way, right? I think there'll obviously be some opportunistic lending. Interest rates are going to go up because the risk is so high. But if we want that to taper down, if the government wants lending to return in a big way and get sort of the economy restarted, I think they'll have to pump in some liquidity. Without that, I don't see how lending companies are going to write with the same assurance or with the same confidence that they did before the crisis started. I think that's going to be a big lacuna which the government will have to fix. I don't think it's I don't think within the VC ecosystem we have enough money to make that happen.
So next thing is around the use of technology, which is kind of springing up now, right? So there have been a couple of demos given to governments, which some have been publicly televised, some more closed door, and also some of these solutions which have been effective to contain COVID-19 outside India has been around a lot of data collection, analyzing, trying to make sure that, for example, people who have traveled abroad or who have come in contact with other, patients, are quarantined and contained, right? And tracking their movements so that they're not going out in crowded places or things like that. Even Apple and Google announced a joint venture a couple of days ago where they've said it's very, and I'll believe them with a pinch of salt, but they said it's, it respects privacy to a large extent while also being able to provide these kind of, while providing technology to help in contact tracing. So, so essentially the question here is there a trade-off that people will have to make between privacy and let's say and healthcare, or privacy and something which should be a fundamental right for them at the end of the day?
Jinesh, you want to take this one?
You can take. I'll take it.
Okay, so I see. Again, this is. I've always believed privacy is a myth, because if you want better services, if you want a better quality of life, privacy is what you give up for it, right? So I'll give a very simple example. If you want to live in a one-star hotel, right, without room service, without anything, you get a lot more privacy than living in a 5-star where a guy comes to your room 3 times a day to clean it and knows everything else that is going on. So it's the price you pay. And I think that even today, like, how sure are we that with all the privacy laws in place, are they all being followed? Every couple of years, there is some company who says that something got leaked, or they had some changes that they didn't realize it was giving out so much information. And in that sense, I do not see that we're living in a myth that there is a privacy, that there's someone who's checking everything. But the pace at which technology is growing, I don't think any government organization can even understand what's really happening at a Facebook, or what's happening at a Google, or what's happening even at Apple. That being said, I think when it comes to healthcare, could we have figured out this crisis if we had better quality data? I'm pretty sure we could have. But then again, we were dealing with this crisis in a country that doesn't really open up its databases, right? Or is, for the lack of better words, probably changing up what really the data exists over there. So we should take it with a grain of salt. I think we would love to know if there was somebody around us that has a COVID-19 case. In most cases, the government has created databases for this. And obviously that could be taken as an invasion of privacy, but without that information, would we be as secure traveling? Would you really want to know if the next time you're on a plane, whether the guy next to you showed some COVID-19 symptoms? Would you want to know? Would you not want to know? Or that he was next to somebody that had one, or met somebody that was asymptomatic for that? I think we'll have to give up some of our privacy for that to happen. And we should be comfortable with that, at least in this current case, till we find a vaccine. I think all bets are off once the vaccine is found.
I mean, I completely agree with Anirudh. I think privacy is a myth, right? And I think if you really want to assure yourself of traceability and transparency, I think you have to give up your privacy. I mean, anyways, I'm not sure. I agree with Anirudh whether all our things are being kept private or not, because I see Google measuring us every time where we travel, where we not travel. They capture all our moments there. I'm sure people would be doing it with or without our permissions. I mean.
Maybe explicitly saying it out is, will also help build trust rather than just, kind of
Yeah, who cares,
implicitly.
right? I mean, in this country, I mean, 5 years ago, people used to pee and shit in the open, right? And we all talk about privacy.
Right. Right. So another question. We recently did a survey with a lot of CFOs that we work with, right? And one of, so apart from some of the standard, maybe not standard, but some pertinent issues that they typically face. So one of the almost 25 to 30% CFOs mentioned that one of their issues is that a lot of the laborers are migrant laborers are migrated back to their hometowns, right? And so now these, kind of villages which were not probably built to accommodate such a population are getting stressed, while at the same time, the urban centers which were banking on these, you know, these folks are not able to manage, are not able to get the help that they need. So I guess a split question there. One is, do you think, uh, yeah, and there were already a lot of focus on the, the NBU kind of the sector, the next billion user sector in India. So do you think that is going to accelerate, or is this a temporary phenomena? So the question is around how is the tech adoption in the rural areas, not specifically to farming or not agriculture, but how is the COVID situation going to affect the tech adoption in rural areas, whether it's for healthcare, education, whatever it might be?
I mean, I'll take a stab at this. I mean, if I take a look, what really has happened in the last 5, 6 years is the advent of geo coming in. Data accessibility is there in the country for the first time, right? So that is something which is now taken care across the country. Second, if you take a look, the migration in India is not going to stop because people will go where there is money. I mean, there could be a temporary phenomenon that people would go back to villages, but they would go where there is an employment generation there, right? So if Indian government uses this COVID-19 crisis to create a generation of employment in the rural India, and then people would not come back to urban areas, and urban areas will slightly less have less pressure on of the people. But if that doesn't happen, I think I don't see a reverse trend of urbanization not happening. I mean, I think urbanization is going to happen for sure. If there are 3.5 crore people doing construction in this country, I mean, where is the construction going to happen? Making the new urban areas, it's not going to stop, right? But if you're able to create opportunities of employment, maybe in terms of fintech, what Anirudh mentioned, banking, maybe a lot of banking correspondent people start using neo banking correspondents. I mean, something like that sort of thing happens, or maybe the government uses the entire rural India excess of agriculture produce to start doing food processing in the country and increase the amount of food processing in the country. Maybe you could see some kind of employment being generated in that part of the country as well. But on a long-term basis, I think the migration issue, people will come back in 2, 3 months, and life has to go on, right? I mean, it's not end of the world. So I don't see a major change happening in the migration piece of the across the country. I mean.
I mean, just to add to Jinesh's point, and I think he made this point earlier as well, that in rural India, most people are living on the essentials and not really going after the discretionary spends. So I don't see a driver who was paying 20,000 rupees or 22,000 rupees in Mumbai, right, and then being able to run a household in rural India. How is he going to do that same thing by living in rural India, right? I think eventually the economics are going to come into play, and he will have to come back to the city, right? No one in a tier 4, tier 5, tier 6 town is going to pay him 25,000 rupees a month to drive a car, right? Most of the places won't even have drivers, right? Most people won't. So in that case, where does he go? right? He's going to come back to the city. Yes, there's going to be a temporary disruption. A lot of people really got, because of the interstate lockdowns, got stuck, and they've had to walk kilometers and kilometers. So you might have a very small part of the population that may not come back, but eventually the economics are going to come back into play. You definitely get paid higher in the city, which, and that arbitrage between working in the city and living in rural India is going to come back into play. And I think it might take 1 or 2 quarters, but the supply chain is going to come back, and economics will eventually drive everything back to the city.
So I know there are a lot of questions, but I think we are running out of time. I know I promised Jinesh that we'll do this within 40 minutes, and we are already at 50 minutes mark. So we'll try to keep it short. So last 2 questions. The first one for Anirudh. So there's a question around what could be the short-term and long-term impacts on renewable energy. As Anirudh, I know you've been in this sector, you worked on this sector for for some time. And so how do you think this is going to impact this is going to have an impact on the renewable energy?
I think there could be a dual impact, and thank you so much for this question. First of all, I think because most businesses are going to see a couple of quarters of washout, it's a proven thing now that solar energy, distributed solar energy on top of rooftops is a much cheaper cost for commercial and industrial companies compared to buying from the grid, right? And so I think there may be a better adoption over there. And in fact, we've seen in our energy business that we've had incoming inquiries even from listed companies that are saying, hey, listen, we want as many rooftops as we have. Can you please put up solar projects over there? Because the cost is 20%, 30%, in some cases 60% cheaper than buying from the grid. So I definitely see that there will be better, there'll be more incoming inquiries for setting up OPEX projects. I think there'll be a marked decrease in CapEx projects where companies are going to put in their own capital to put up solar projects because many of them are going to be stressed. Many of them are required to pay salaries while there's no revenue coming in. However, I definitely would warn anybody that's on the OPEX side and giving out capital. While it's going to seem like there is so much inquiries coming in, this is your time to really increase your underwriting skills, understand if those businesses are going to survive. If there is a W-shaped recovery and you've made an investment just at the peak of the W, right? And then it goes back down, you could see a complete loss of capital. Any OPEX project, and I think this is something I learned from my time in the US, is when we were selling long-term 5-year, 6-year, 7-year energy rate projects, the supplier would always credit qualify the buyer of the energy. And the idea was that, can he actually make this payment for 5 years? Or is this business going to shut down in 5 years and I'm going to be left with a long-term contract where I have to unwind it into the market? So similarly, if you're setting up a 15-year solar power project on someone's rooftop and their business may not exist in 7 years, every single metric you've shown that I'm going to make money back on this project is going to be negative. It's going to be wrong. So you have to bring in better underwriting skills. You have to be much more cognizant of where you're putting in the money. And if the business is not going to survive the length of the time your project is on their rooftop, better to say no than to say yes and then worry about it later.
Great, thanks. And so last question, and I think we can't let you guys go with 2 VCs on the panel. This is something that is bound to come. So what do you think are the next, the new opportunities that, that will emerge out of, this kind of unpredictable, this situation? And, and if you guys can share whether you guys are already, are actively investing or not, and what are the criteria, or if the criteria have changed for you to invest in because of COVID-19?
Sure, I'll take a first step at that. I think the sectors which we think investments are going to pick up is healthcare, education, anything which can be done using technology and can reduce the cost. I think those are sectors which people would want to invest. I am focused on agriculture sector, and we think this crisis is going to bring more opportunities for people to use technology in the agriculture sector. So we're going to keep investing in this sector. But in the initial, without the crisis, we used to worry about break-even happening 3 to 5 years. Now we're not really sure whether we want to fund companies where the breakthrough is going to happen in 3 to 5 years. We're going to look at genuine business models which can start delivering value for the customers and make money for itself. We think as a fund, we will continue to make investments, but we will set the bar much higher than what we used to in the past. Right? We will wait for the real business model, look for execution teams, and figure out if things people can work out even in such situations like COVID.
I think I'll take a segue just from Jinesh. I think adaptability of the founder is at question today, and if we don't see, and what we really want to see is that founders that have quickly adapted to the situation, they've either figured out how to cut costs, they figured out how to find new revenue lines, and they've overall been with it, right? They've not lagged it. They've been ahead of the crisis at all points. And I think those kind of things really are going to be part of our decision making moving forward. Because I don't see how this is just one-off thing. It could become a recurring event for us. In terms of writing checks, we're still writing checks. In fact, we just signed a term sheet. In fact, we should be signing a term sheet in the next couple of hours. So the money flow is still on from our side. Yes, we are much more vigilant on the valuations. We always were. And in terms of burn, typically I never wrote checks into businesses that had massive burns at the start. We can understand growth spending, but we don't understand huge development spends. So in that way, I think that policy has paid us well throughout. I've been through 3 recessions now in the last 10 years, and every single time, those businesses have done well. I think there could be a huge business opportunity in B2B companies that are taking other businesses digital first, and I think those are some of the companies we're looking at investing into. But again, we haven't really found that one company that really is going to make it happen. But hopefully in the next 30 to 60 days, we'll find something that we can really dig our teeth into, and that can take other SMEs online, and there could be a huge money-making opportunity over there.
Thanks, guys. Thanks a lot for this. Just wanted to give Jinesh and Anirudh a couple of seconds. Anything else that you want to cover, or if people want to follow you or hear your thoughts on on anything, where can they find you on, let's say, any place where they can find you on Twitter, blogging, anything else?
You can find me everywhere. I always use the nickname Show Me the Money, SHOWMEDAMANI. So I'm active on Twitter, active on LinkedIn. In terms of, I think any parting comments from my side would be like, guys, whether you have money in the bank account, whether it's 5 lakhs, 5 crores or 50 crores, you have to make it run for the next 18 months. And your survival is the most important thing, more than anything else, right? If you did not grow at all for the next 18 months, but you survived the 18 months and you were ready to, and you were doing business and you were still, able to survive this really tough period, I think that there's a lot of respect for that. And you'll find, it'll be this case where, people want to come and invest into you because you're resilient, because you're smart, and because you're adapt. I think those are the ending thoughts from my side.
So from my perspective, best way is to write an email because that remains on the mailbox and I can respond on time. Social media, I'm available, but it's very short response time. So I would prefer emails or the social media. On terms of the parting comments, it's like, guys, this crisis has happened, right? We all could say good things, but we never knew what happened. So best is to figure out how you're going to survive for this. And time always changes, right? It's a tough time. It's going to change. Wait for 1, 2, 3 quarters, 4 quarters, and I think we will be back to normal. So it's not end of the world. We just have to hang around, and hopefully we'll make through it. On the other side.
Awesome. Thanks a lot. Thanks, Jinesh. Thanks, Anirudh, for joining us. Stay safe. Stay healthy. Audience, if you have any thoughts, feedback, comments on this, please send us an email on connect@KredX.com. If you have any panelist specific questions for Jinesh or Anirudh, you can send it to them directly on what they mentioned, or you can send it to us and we'll forward it to them. And everyone here also, please stay safe, and thanks for joining in. The video of this will be available on YouTube. So I think. Just send us an email on connect@KredX.com. We'll get back to you on that as well. Thanks, guys.
Thank you.
Thank you so much, Devang. Thank you so much, Jinesh.
Thank you.